folks, happy Monday to you. So what a reversal in things we're going to have today. So we might have a ceasefire in Iran. So that is actually helping the markets quite a bit today. So folks, my name is Dan Frio. My goal is to explain to you guys what in the heck's going to go on with these things today, mortgage rates and the whys behind it. Just want to let you know the reason why I'm doing a live event is my mom's not doing too good. So we had to put her on a hospice. So I'm heading back to West Virginia right after the show. So if you need anything, my team is here to help you guys. But without further ado, I want to get over to these things so you guys can understand what's going to go on with mortgage rates this week. That's probably going to go on stocks, bonds, cryptocurrencies, and oil. So without further ado, folks, let's get to today's show. So if you can hear me, let me know. Please just give me a thumbs up. I know you guys don't like to comment. So what happened to rates? Rates were at 6.5%. They were 5.99 just 3 weeks ago. So what's going on? It's the Iranian war. So we're going to look at oil to see where oil's going. That's basically the direction where everything's going to go. Because what people are saying, or what the economists are saying, is oil is going to increase inflation everywhere. Think of it. I want to show you what diesel prices are doing. Diesel prices are like $5 plus a gallon. So if you have diesel, the thing that trucks use to get things everywhere, if we have that skyrocketing, yeah, inflation is going to go up. So without further ado, folks, let's get to today's rates because I think we're going to have a nice little reprieve today. So mortgage bonds, they're up 12 ticks. This is great news. So if you're new to my channel, we watch this thing right over through here. It's the mortgage bond. All you have to understand is this, that number up through there, where it says green, it's 12. Let's pay attention to that because on Friday when we have our live event, remember when we were watching this, it went from, I think it was down like 68. By the time we were done, it was down almost 100 points. So as this goes down, that means mortgage rates go up. You can see right through here, all these little orange bubbles. That means mortgage companies, banks, credit unions, they adjusted their rates. And if you look at, well, that better, it's all saying worse. It means mortgage rates are going to go up. So what's the data that we have this week? Well, here's one piece of the puzzle I want you guys to understand. Iran threatens U.S. Treasury buyers. And what they're saying is, well, if you're buying U.S. Treasuries, that means you're going to support the American efforts in this. So that's kind of the headlines that you're going to see with some of these. So they're saying, okay, don't buy Treasury bills or bonds because it's only helping the U.S. So we know how Treasuries work when it comes to interest rates. But the biggest news right now is this. Oil prices were at $119. If you're watching oil, the real oil number we're watching, it was $119. When was it? It was about a month ago. Let's see. Maybe it got to $119 a barrel. But where is it right now? Well, it's coming down, and it's coming down nicely. It's at $90 a barrel. That's going to help the inflation front. What's going on is they're saying, okay, there's going to be a ceasefire because President Trump says, okay, if you want to start bombing, energy plants, we're just going to blow your oil fields to smithereens, and then you won't have any oil. Well, that's kind of the gist of what's going on behind the scenes. So right through here, you saw the headlines right here. Dow jumps 800 points. I told you guys, as soon as this war's over, you're going to see the stock market just rally, and you're going to see mortgage rates coming down. So did you miss these mortgage rates like 5.99 about 2 weeks ago? I don't think so. They might be back. I'll give you some tools so you can track these things. But let's get over to this piece of the puzzle. Oil, fuel prices, diesel prices. Look down through here. Here's where diesel prices are right now. So in a month ago, on February 17th, diesel on the East Coast was $3.76. Now it's $5 a gallon. So this is where inflation's really going to pick up because diesel, think of diesel, it's in every truck that's really pretty much out there. So you're going to have this stuff skyrocket. If you go down to, look at California. This is crazy. If you guys live in California, give me a comment down there. Your gas is $1. Look at the Gulf Coast, $4.80. You're almost $2 higher than them. Maybe you guys need to do something out there. Okay, so what chats we got? Can you guys hear me? Praying for your mom. Thank you so much, Calm Chaos. Thanks for joining me today as well. So yeah, kind words out. My mom's, she'll be 88 on May 14th. So I don't know if she's going to make it, but I'll be heading back there today. So give me prayers if you guys don't mind. But let's get over to this. Here's my mom. So I've been trying to do videos for her. This is my mom and dad. This was a couple years ago. My dad passed. He was 91 years old. This is a time when me, my wife, and we took my parents out for some ice cream and dinner. This is West Virginia. You can see all the hills in the background. So, Dad, you're sorely missed. And Mom, I'll be seeing you in a couple hours. So let's get over to the stock market. We got the stock market up 800 points. I told you this thing would come back. So here's what you guys need to look for. Watch the Iranian conflict and watch oil. Where you see that stuff going, you're going to see everything else. Now, I'm going to make a comment here, and this is going to be political. There was the Democratic the head of the Democratic Party, I forget what his name is. He came out, I think it was this morning, saying he's against ICE going to the airports because he thinks that they're going to kill people and maim people. And that was actually his comment. So, and I hate getting political, but folks, please calm down the rhetoric. That's what's causing all these headaches. So support our military, support our country if you're here. That's all I want to say. So here's what we have. We have the Dow Jones up 800 points. It's all because of maybe the conflict's going to be over. So you're going to see oil retracting, and especially if this is signed, sealed, and delivered, because what you're having right now is Iran's coming in saying, we have no negotiations with Trump right now. But then you watch our news, and they're saying, yeah, it looks like there might be an end in sight, maybe in the next week. So that's why the markets are doing what they're doing. So who do you believe? Well, we're going to continue to watch those things. But if you look over through here, the Dow Jones was up 900 points. The bond markets, man, this is where it's really getting kind of confusing. So if you're watching mortgage rates, here's what you watch. So hopefully you watch me on a daily basis. It's right through here. Here's a 5-day chart. Look at this thing. And what you have to understand is down is bad. Okay, rates up here were about 5.99. Okay, let's go back a month. Okay, back through here, rates were 5.99. You can see how as this goes down, rates go up. So today, I expected this, especially with oil just rallying, this would be up 20, 30 points. So we're going to continue to watch this on a daily basis. But this oil in the Middle East is basically everything right now. Let's go to the economic calendar. There's nothing this week. We had last week. Think of what we had last week. We had the Federal Reserve come in. They didn't do anything. There's also a chance now, maybe as this conflict keeps going, that the Fed might raise rates. Yeah, right. Let's get over to what the Federal Reserve's. This is the calculator we watch, or this is what the Federal Reserve watches right through here. They watch inflation, the PCE. This number went up recently. This is going to be over 3% in the next reading because of oil. Then you got the unemployment rate. This is the only thing saving us right now. The unemployment numbers are pretty good. Anything under 5% is full employment. So you have full employment. You have inflation that's way over target, and with the Federal Reserve's monitoring. So now what they're saying is, could the Federal Reserve actually increase rates? Actually, yeah, increase rates. Let's go down. We're going to go to the CME Fed Watch tool. In 37 days, remember we kept going here and we'd laugh. Okay, the Federal Reserve's not going to cut. There's a 99% chance. Now here's the concern I have. Now I don't think this is going to play out, but let's get over to what the next meetings are going to kind of give us when it comes to the Federal Reserve. So this chart actually tells us what's the probability of what the Federal Reserve is going to do at the next meeting. Heck, the meeting's all the way through the end of 2027. You notice down here, there's nothing. There's a 90% chance that the federal funds rate is going to be 3.5, 3.75. I hope you can see it up through there. That's what that's what they control. They control this rate right through here, the federal funds rate. So currently it's at 3.5, 3.75. If you go over to here, 3.5, 3.75, it's going to be there all year and all of next year mostly. So now they're saying there is no Fed cuts on the table. So now what do you do? Well, let me go over to this thing. I want to just give you some insights. Over the last few days, I'm like, I don't know what you should do. If you're a homeowner, you're kind of in the catbird seat. If you're a homeowner, you already got your rate. You're already locked in. You know your payment. I can give you some tools to show you maybe how you can bring down those payments as rates come down. But if you're a home buyer, now what do you do? You're like, okay, rates were 5.99, now they're at 6.5. People are saying they're going to go to 7. If this continues to go on, how high are they going to go? Well, if you really want to try to figure out where rates are going, maybe even what kind of payment this looks like, I'm going to give you a tool here. This is several tools. All these are free. Okay, I don't want you guys to pay for anything. I'm probably as cheap as you guys are. So let's get over here. Here's the first thing I want to go through, and then I'll go back to what you guys should do, and I'll give you some tools on what you did to do if you're a homeowner, home buyer. So if you're a homeowner or a home buyer, here's tools for you. If you see any prices in here, if you go to my channel and you're like, okay, I really want this calculated down here, does it make sense to refinance? So click it, scroll down through here. If there's any prices down through here, let me know. All these should be free, just download it. Okay, it's going to give you some tools. These are things I created. You're going to plug in your numbers. It's going to tell you exactly what your payment is. Does it make sense to refinance? Well, let's get over to this. Here's what my thoughts are behind all this. I kept saying, okay, when this conflict is over, let's just kind of go kind of like we were doing with COVID. A lot of economists are coming out saying, okay, we really have to use 2019 numbers because that's basically pre-COVID. That's before the world went crazy. Okay, so now what are we seeing? Well, we're seeing all these rates jumping and people are like, okay, I can't afford this house now and I missed it if I'm looking to refinance. Well, let's get over what my thoughts are on this. I think rates are going to come down not as fast as they went up, kind of like oil prices and gas. You're going to go to the pump in the next week or two. They're going to be flat. Even if you see oil prices kind of crumbling like they're doing right now. So we got oil. Let's go back here. I really want to pay attention to oil. Now oil is it's down almost $7 a share. So now it's at $90 a barrel. This was $60 a barrel a couple months ago. Let me show you. Down through here, here's where oil was down through here. This is a huge, massive spike. And this is hugely inflationary. So what is the economy? What are mortgage rates? What do they trade off of? Anxiety levels on Wall Street and inflation fears. So let's break this down. Let me know what you guys think. We have, and you think of all this chaos, and it's crazy. Okay, so first thing is, let's just look at our where we are today. We have all these things about ICE and the Homeland Security. You know, we need Homeland Security, folks. I don't care what side of the aisle you're on. We need it. Okay, so we have a government that's shut down. Okay, we have Middle East war. We'll say it's a war. Then we have Russia and Ukraine. Remember that? Then we have Gaza. Remember that? We have a midterm election. Remember that's coming up? So all I'm asking you guys to do is just do your due diligence. Like each day, come in here, watch me for 5 minutes. I'm going to tell you exactly what's going on in the markets and the whys behind it. But what I want you guys to do this time, please do me a favor. Do me one favor. Before you go out and vote this year, do your due diligence. Go to ChatGPT. Do all this stuff. Really do a breakdown of your candidate so you can figure out what's going on, because it plays a role in all these things over through here. So let's get over to what my expectations are. If you're a homeowner, home buyer, where are rates going to go from here? If you're an investor, where's stocks, bonds, cryptocurrency is going to go from here? Let me give you my thoughts on all this. Okay, so if I'm a homeowner, here's what I would do. We have a tool right through here, and it's called RateWatch 2.1. Plug in your information. Let me know 2 things. What rate would you like to refinance? I'll call you, text you, email you. We'll go over what the new payment would be, what the cost would be, and what your break-even point is going to be. That'll help you out quite a bit. You can see, okay, does this savings really make sense? What's my break-even point? Let's say you're looking to buy now. Okay, so plug in your information up here. So now let's say you're looking to buy. You're like, okay, the spring season's here. I got pre-approved at $599. Now rates are 6.5. What's my payment going to be? What can I afford? Where are rates going to go from here? What can I do if rates hit 7%? Can I still afford this house? Go to the calculators, folks. That's why I created these things. But follow me each day. So here's my expectations. If I'm a homeowner right now, I'm putting my information in there. I'm not locking in right now. Rates are going to come down. I know they're going to come down. Mark my word. We're going to come back on Friday. If I'm around on Friday, I'll try to do live events throughout the week to just give you guys some tidbits on what's going on. But I'm just saying, sit on the sidelines right now. Don't lock in. Rates have peaked. They're peaked right now. We got the bond market down. What is it? Double digits. So rates are going to come down. It's kind of peaking down a little bit right here, down up 12. Let's look at this 5-day chart. Again, what you have to pay attention to is as this goes down, rates are going to go up. So the reason why these went down, the Middle East. So as the Middle East goes away, will these go right back up? I don't think they're going to go all the way back up to 599 or back down to 599 because we have this inflation spike that we're going to have. So rates are going to ease back. Hold on, but put your information in here and make sure you get pre-approved. Okay, so here's what I would do if I'm a home buyer looking out there. Get pre-approved at 7%. You might think I'm crazy, but if you can afford a house at 7%, well, if rates come down to 6.25, 6 back to 6, you can really afford that house. So don't be house poor. So the economic news for this week, really nothing. We got manufacturing numbers. If you go to this website, you go to Bloomberg.com. So if you're a loan officer or a realtor, you might want to know the economic news that's coming out for the week. So go to this. Here's what I want to do. And a lot of times this will just buffers, but let's go down through here. What I do is I pick, the most important things out here, but down through here, usually I pick 1, maybe 2, because it gives you a slew of data. But let's click over. Let's see if it buffers real quick. Okay, so let's go through and make sure we analyze every detail that's coming out this week. And I'm going to show the repercussions that this is going to have on the markets, stocks, bonds, cryptocurrencies, and even mortgage rates. So today, Monday, we got construction spending. That's going to be out in just a little bit. I don't really think I'm not going to pay attention to that. Atlanta Fed GDP. Last reading is 2.3. Oh, my apologies, folks. They're expecting it to stay at 2.3. The Fed came out last week when the Federal Reserve came out and told us they're not going to cut rates. They said they have an expectations of the GDP at 2.4, actually stronger than where it is today. That was the Fed just last week, even during the middle of this conflict. Okay, so then on Tuesday, we get ADP payroll reports, non-farm payroll productivity, unit labor cost, manufacturing. All this number is going to give us a lot of data that the Federal Reserve watches. So let me just advise you what's going to go on. ADP payroll numbers come in. This is going to tell us how many people are employed. I'll look at this number. I usually don't put much credence in this. But when you had a jobs report come in recently and there was like 90-something thousand people that just disappeared, I want to start looking at ADP numbers, the initial jobless claims and things like that to really focus in on that. Then you look at labor costs right through here. This is going to give, let me see if I can, I don't want to mess up my screen. Unit labor cost, that's going to tell us how inflationary the labor is. Manufacturing PMI, that's going to actually tell us the inflation rates on manufacturing. They're saying are 51 to 51. It's going to be stable. To your note, what else do we got here? On Wednesday, we have nothing on Wednesday either. Then Thursday, we continue every Thursday, just so you guys know, we have initial jobless claims and continued claims. This is the money ball right now for the Fed. They're like, okay, in the tariffs thing, we're inflationary enough, and we did have some inflation. Now, this oil thing is going to really push up inflation. We're going to continue to monitor that because those two events are really pushing inflation levels really high. So then you look at continued jobless claims and initial claims. That's where it is. So if you see these stable, well, you're going to see the Federal Reserve just hold off. So the numbers right now look like this. Continued claims is 1.8 million. It's been steady at that for months and months and months. If you get the initial jobless claims, last reading, sorry, it's right above my head. I'm trying to get it in there for you guys to see. Last reading was 205. They expect the initial jobless claims, remember the initial jobless claims, to uptick to 211. Nothing major. If you see this go up to 3, 4, 500, then you start to freak out, especially continued claims. Okay, and then let's get to Friday. Usually Friday we start getting some inflation numbers, but this week, really nothing. Just retail inventory, the Michigan consumer sentiment. I don't really follow a lot of these things down through here. Really nothing. So this week, last week, we had just a slew of information. This week, it's kind of stagnant. Just watch oil in the Middle East. That's all you have to focus in on. So as you follow oil right through here, you're going to see as this comes down, you're going to see mortgage rates follow. And as rates come down, you're going to see the stock market jump up as well. So sure love tacos. Yeah, it is what it is. So folks, I don't really care which side of the aisle you're on. All I want you to do is do your due diligence. Everybody has their own reasonings for things. I guess I would say, am I an immigrant or a white person or whatever? Let me just say, I'm second generation. All my grandparents were from Italy. I'm blessed to be here. I'm truly blessed to be here. I came from a small little steel coal mine town. Now I live in Chicago. I have a nice house, pool, cars, and this and that. I'm not bragging about those things. It's the opportunities that this country gives you. And, I'm proof positive that you can do it. So watch my show each day, folks. My goal is to help you understand all these things. So let's get to one last piece of the puzzle. So you're here with me today. Let's go to Yahoo Finance for kicks. I just want to go over to our remember we had Stock Talk Tuesdays. Let's get over and see how theirs are faring for the day. So if we go down through here, the rate update. Now let's see, we were positive still, but this pullback in the stocks, look at this. This is pretty good. This is what I did here is I created a Stock Talk Tuesday. I have a lot of friends, family, nephews, nieces. They're like, Uncle Dan, we really love to understand how all this stuff works. So what I started doing is I started putting a stock portfolio together to help you guys understand how all this works. And here's our portfolio. Look, it's up 1.5% today. But we created this almost about a year ago. We're up 12%. I'll take that, especially with the correction that we just had. It was like a 6% correction. I said the markets were a little frothy, but these investments are doing pretty good. If you go down through here, these are the things that we purchased, and I'm basically explaining to you guys why we did it. Things down here like steel ETFs. These are steel companies that you can monitor, financial companies, and the whole works. But folks, my whole goal each day is to really help you understand stocks, bonds, cryptocurrencies, and these things over here. The reason why I do this is you're probably joining me, you know who I am. My name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. If you're here, if you're watching this, you're either a loan officer or realtor. Thank you for joining me. Or you're a consumer looking to maybe, can I refinance? Does it make sense to refinance at this point? Or are these rates so high, is it really making housing unaffordable? Please reach out to us. Don't disqualify yourself. That's what most people do. Why do most companies don't succeed? Well, people don't even start them. So you can't really fail unless you really try. My goal is to help you guys understand these and see how much of a lower rate you can get, or can you even buy a house? But I'm not here to FOMO home ownership, folks. I don't think everybody should own a house, but if you really want to, I'd love to help you with this. So my thoughts for today is mortgage rates, they're 6.5, 6.53. They are going to come back. They're not going to come back huge. They're up 18 ticks right now, but this is the chart over a 5-day chart. This is bad. Okay, it's down, down, down and away. Let's go to a 2-day chart. If we can recover up to here today, I'd say this is a positive day. So this will bring rates back under 6.5%. That's what I'm expecting today. And if this war, if this conflict in the Middle East is truly at a ceasefire or close to an end, you're going to see the stocks just rally from here, and you're going to see bonds follow suit as well. The prices are going up, yields coming down. That's how all this stuff works. So we got the MBSs up 21. We started this. What was it when we started this? Maybe in the teens. So we got MBSs up 21. Let's go see what the stock market's doing. It up 799 points. It was up 900 points. That's good news. But the big news of the day right through here, oil prices. Watch this oil right over here. Don't be deceived when they keep saying, oh, oil's at $120, $130 a barrel. Please watch oil, not Brent crude, because this is really the number that we follow. So that's it for the day. The economic calendar for this week is pretty slim. You got the Federal Reserve. They're just going to sit on the sidelines and they're going to do nothing. But the concern right now on Wall Street is the Federal Reserve actually going to increase rates? And there's more of a chance that they're going to increase rates than cut rates. Because if you go over, let's just look at the next meetings in, let's say July or June or the next few meetings, there's a bigger percent chance that they're going to increase rates than cut rates right through here. So in the July-June meetings, there's an 84% chance they're going to keep rates where they are, but there's a 15% chance they're going to increase rates. A little confused? Well, subscribe over there so every day I post this video and you actually can understand now what's really going on. So if there's any questions out there, I would love to answer those for you. If not, I am going to head out. I'll get this posted all over social media. My team is here available for you guys if you need some assistance with this today. But please do me a favor. Go to our calculator page. I created all these myself. And the reason why I did this is so you guys can use common sense calculators to just determine, some of these things. For example, does it make sense to refinance? There's a tool right there. And all these are free. Down through here, mortgage payment or mortgage program finder. What program do you think you're going to qualify for? And this will actually tell you exactly what you will qualify for in the whys. But that's it for today, folks. So I'm expecting rates to drop below 6.5%. The reason being is mortgage bonds are rallying. They're now up 23%, jumping right up through there. And we also have stocks. Stocks are at almost up 800 points for today. So this, my friends, I'm going to say is a Cinderella story. We got the Dow Jones, the S&P, and the NASDAQ. All up and away. We got oil actually down almost 9 to 10%. We have cryptocurrency. Let's push our luck. Cryptocurrencies is up $71,000 a coin. So all the way across the board, it is looking good. So don't freak out. Relax. Be safe. Enjoy your day. And put my mom in your prayers if you would. I will be back tomorrow if I can, and to give you guys an update on what in the heck is going on with these and the whys. Oh, we do have a question here. Let's jump over to some questions. If you guys have questions, please ask them. That's what I'm here for. I'll be gone most of the day, the rest of the day, and I don't know what the week's going to look like, but is it right time to buy homes these days? Yeah, well, I guess a question I would ask is, and here's what I ask some people, when's the optimum time to have a child? If you're married, it's like, okay, should we have a child now? Should we? So buying a house it's up to you. What is your area doing? Can you afford it? Are you going to stay there for a long time? So let's just go through the punch list of this. And that's a fantastic question. If you really want to buy a house, does it make sense? Can you afford it? That's the number one thing. Can you afford it versus what you're paying in rent? Okay. You don't know. Okay. Go to some of my calculators. It'll kind of do the pros and cons of, there's even things in there. Should you rent or buy? Okay. So now what is your credit score? What kind of rate can you get? Let's really drive down that payment. Can you really afford those payments? Okay. But before you go there, what is your credit score? Let's clean up some of these things for you. So go to creditscoresandmore.com. Here's a website I actually created a couple years ago. Creditscoresandmore.com. I'm giving you all the tools right at your fingertips, folks. So if you go to creditscoresandmore.com, you're going to go right through here. I created this to help people understand their credit. Okay. So you go down through here. This is going to give you cool tools for free credit scores. So click that. It's actually it's free. It's free. It's going to be a Vantage score. So be careful. Banks right now, when you're qualifying for a mortgage, they use what's called your FICO score. You really want to get your FICO score? Hit this one right over through here. I can't get there from my site because I'm using banking software right now, so it blocks me. That's going to take you to my FICO. That's your true credit score that banks use. So what is your credit score? What kind of program do you fit into? What do you qualify for? What's your payment? How much is your interest rate? All these you can find right through here with the tools I have. Here's your mortgage rates. Follow me on mortgage rates each day. So what do you have so far? You have a system right here to figure out what your credit scores are. Then you have a tools right through here. You can go over to here and find all the different programs that are available for you. And then from there, you can go over and from that, you can say, okay, well, now I can fit for one of these programs right through here. That's basically where the rates are. So can I afford that house? Well, that's where we're hoping to help you guys decide. And if you're a homeowner, you're looking to see if maybe refinancing makes sense, please reach out to us at the rate update and also check our tools out. So what is the rate that's optimal for you when it comes to refinancing? So folks, that is it for today. Mortgage rates, they're going to get better. They're up 26 and they're continuing to rally. Stocks, well, the threat right now is the Iranian conflict, but stocks are still continuing to rally up through there. They're up 761 points. So it is a Cinderella story, folks. So rates are down, stocks are up, oil's down, and it looks like there might be some peace in the Middle East. That's all we can wish for. So thanks for watching, folks. Please subscribe over there so every day I post a video, you get an alert. And if you're out there and need some help with a mortgage, if you're looking to buy or refinance, I'd love to be able to help you. And hopefully now you understand a little bit more on how mortgage rates work and all the tools that you have at your fingertips to help you maneuver all this and more. So thanks for watching, folks. Greatly appreciate it. I'll be driving the rest of the day, so hopefully I'll see you tomorrow live. If you got any questions, email me, text me,